All right, I am going to get things started. We're at about 9:16. Hi, everyone. Thank you so much for coming out to Startup Boston Week. My name is Hanny, and I'm one of the organizers for this event. On my screen right now, you should see currently the sessions that are happening right now. You're logged in for Investors Without Borders. I hope that's where everyone intends to be. If not, um, we'll miss you, but feel free to jump over. We also have a bunch of exciting panels going on throughout the day and throughout the rest of the week. So please check those out on the under the agenda tab uh, at the top of your screen, and you can always just click join to enter the session that you wanna watch. As a reminder, we absolutely love questions, so please feel free to use the Q&A tab on the far right of your screen to submit any questions that you have during the session, and we'll do our best to get those questions to the panelists to get their thoughts on them. We also have a really neat social media competition going on this week. You'll want to pay attention. I would hope you're already paying attention, but pay close attention to what the speakers are saying. If you post an awesome quote on social media and use the hashtag SBW2021, SBW 2021, you'll be entered to win one of $500 gift cards to a Black-owned business in Boston. So without further ado, I'll pass it over to Ian, our moderator, and kick things off. Thank you, everyone.
Thanks, Hanny. And good morning, everyone, and welcome to Startup Boston Day 3. My name is Ian Kane. I am a co-founder and executive chairman of Cubic Labs. And Cubic Labs is a startup incubator and innovation hub that supports entrepreneurs who are building businesses around financial, government, and civic technologies. We're based in Quincy, Massachusetts, where we're spreading the entrepreneurship and innovation love south of Boston with the goal of creating 1,000 jobs over the next 10 years. In my nighttime, I'm also a city councilor in Quincy. But today, I'm honored to be hosting this morning's panel titled Investors Without Borders: Does Geography Matter Anymore in Investing? Now, to me, as someone that runs an economic development organization, the answer is a resounding yes. But that's why we're going to have a thoughtful discussion with some of the region's venture investors and everyone's favorite Boston Business Journal reporter. Before we say hello to our distinguished panel, I'd like to first give a shout out to the founder and lead organizer of this wildly impressive startup Boston, Stephanie Rulick. If you didn't know, Stephanie's a proud Quincy resident, which is only one of the many reasons to love her. Congratulations to Stephanie and her amazing team for pulling off another successful year and bringing the startup community as close as possible together. I'd also like to thank Hani Azam and Amanda Toomey from Startup Boston for their guidance and patience organizing and leading this panel. And now to our panelists. Now, I hope my colleagues on the panel will be so kind as to introduce themselves. And because chivalry does still exist, I'd like Lucy from the Boston Business Journal to lead us off.
Good morning, everyone. I am Lucy. I am the tech reporter for the Boston Business Journal. I'd like to give a shout out to my colleagues who are amazing reporters and writers and break stories every day. As for me, I report on tech and venture capital in Boston. I've been in my position for almost 3 years now. And before that, I was a Bostino, so covering the early stage startup scene. It's all connected. Very glad to be here. And I will pass the baton to the next panelist. I see Rob on my screen.
Thank you.
Hi there.
Sorry?
Should we get going? So I'm Rob. I'm a co-founder and partner at NextView. We're a pre-seed and seed-focused venture capital firm, offices in New York and Boston. We've been around for about 10 years, shockingly. And, we invest across the country, made a bunch of investments in Boston, like Whoop, Devoted Health, Drift, BookBub, and a bunch of others. And also a number of companies that started here and moved to another geography, like ThreadUp, Skills, Plastic. So there's been an interesting discussion as we think about geography, and we see the topic kind of evolving over the last 10 years and have some strong points of view here.
Thanks, Rob. Daniel?
Hello, everyone. I'm Daniel Achampon. I am one of the co-founders and general partners at Visible Hands. And Visible Hands, we are a pre-seed fund with a fellowship to really identify talented women and people of color who wanna build technology venture backable companies. And we also have a fellowship model, and the idea is that throughout that fellowship model is a 14-week process through which we support our founders in starting to build out a strong founding team and helping them go through customer traction to validate that there's a customer at the end before they spend any resources and money and time on prototyping and such. So it's been exciting that we kicked off our inaugural cohort last week, and just seeing so many great talent build companies. So we're excited to have this conversation and thinking about how we source them across the country. It's been exciting. So I'll pass it on to the next person here, Michael.
Thanks, Daniel, and congratulations on what you're doing with Visible. It's very impressive. It's a great reason to have, obviously, a different approach, and I think you're making a real difference. So I also wanted to say hats off to Robco, because you guys figured out you needed to make a sort of a break out of Boston to do New York investing. So I'll be very curious to hear about that. And then the only other person I know who has a non-Boston accent, Lucy. She's been my kind of, if you like, support system in Boston to talk about we don't all have to have a Boston accent to be able to invest. That's probably my only contribution to the investing without borders. But I'm looking forward to sharing the investments we've made in Boston. About 2/3 of our portfolio is Boston based, and there's some significant ones outside of Boston which we can talk about.
Thank you very much, Michael, and thank you to the panel for your introductions. So let's get down to it. So Michael, you just, in reverse order from the introductions, I think you just alluded to it. You said 2/3 of your portfolio is in Boston, but generally, does geography matter anymore in investing?
Absolutely not. So the why so definitive about that? I don't think you can bound entrepreneurship. It occurs wherever it occurs. If people see a problem in Southeast Asia and they decide to bring it to Boston, that's great. But if they decide, no, they need to take it to Japan because that's where it's going to be most successful, then great. The real question is not ours, it's the entrepreneur. Do they feel like where they're starting their company is important to solving the problem? And if it's very local, and for an example, Intuit, when they were coming over to Europe a long time ago, I spoke with Scott Cook and he decided, he really couldn't do it from California. There were too many different, for example, approaches in Germany, the Mittelstand, as they, call it there, for tax and accounting and everything else. And so he needed to have a local organization, and it turned out to be a very good approach. But by contrast, I think there are founders in Boston who very specifically feel like they're doing an open source project. It's distributed. It doesn't matter where on earth it is. And in fact, the people that they have need to represent the audience that they're going to sell to everywhere in the world. And so they want it to be, very much non-Boston based, but instead distributed, even if they're based here.
Thank you. And Rob, what do you think about that? Considering Michael alluded to the fact that you have set a pathway for investing outside of Boston. So tell us a little about what you think about geographical investing.
Yeah, so I would say geography matters, but it's mattering less and less. When we started our firm, right out of the gate, we were multi-geography, primarily Boston, New York, and some San Francisco. We were about a third when we started, maybe a little bit more heavily weighted on the East Coast. I just looked quickly at our last 10 investments, and we have 1 Boston, 2 New York, 2 San Francisco, and the remaining 5 are in places like Austin, Oregon, Seattle, Washington, D.C. So that's been kind of interesting. I agree with Michael that we sort of take our cues from entrepreneurs. And I think geography does matter in some cases for building companies in terms of trying to find density of talent, although in some cases that's becoming less important. I think that entrepreneurs are increasingly of the opinion that they are going to live where they want to live. So from a kind of a community and local development standpoint, I think the onus actually is then on the cities to make these places really, really attractive places to live, because as geography matters less, it's actually an opportunity, not a risk for cities like Boston, because that just means that if we're a competitive place to live, you can attract people from San Francisco, where folks are leaving in droves, or other geographies. We can't change the weather, but we can certainly make everything else much more attractive for folks to think about living here and building a company here.
So Daniel, Lucy, on that, do you think that Boston's doing a good job at attracting the talent to support the entrepreneurship or innovation ecosystem?
Yeah, I mean, Boston has always been an incredible hub to attract talent and invest in talent. But it's been interesting to see how the world has been changing. Especially, I'll say there was an acceleration the past year or two given COVID, and pushing everybody to go towards a distributed model, whether you like it or not. So when we first started Visible Hands, we wanted to bring talent to Boston. But then when COVID hit, we realized that it was a couple of things happened for us. That was actually an important advantage for us to expand our sourcing capabilities across the country. So we were targeting 500 applicants, really talented women, people of color who want to build tech companies. But by being flexible and expanding the pool across the country, it allowed us to actually hit over 900 applicants. So, and then seeing the different cities that it came from DC, San Francisco, New York, Boston. Of course, those were the expected places. But then we had people coming from, Ohio, Idaho, just like really places that you wouldn't have thought that, so many great talent would be building, venture backable technology companies. So I think the distributed model has forced us, right, to expand not only talent, but really figure out how can we support that talent. So we see it both from the entrepreneur perspective and also from the VC perspective.
And Lucy, you talked to a number of funders, investors, and founders. And so, what are you seeing out there in the marketplace? Where's capital going and where are entrepreneurs living?
Really, I'd like to start with it's a bit anecdotal, but let me tell you this. I work for the BBJ, which is a very local paper in many sense. What's happening in Massachusetts is way, way more relevant to us compared to what's happening in Boston, in DC or other parts of the country. So my questions to companies, to VCs, to funders, they're always like, where are you based in Boston? How many of your employees are in Boston? Which part of your portfolio is based in Boston? I always like to ask for those local numbers. And what I have seen since March 2020 is that, people have to think about that. What was before like a very clear sense of what they had in the region now is a little bit more like, employers say, we're giving our employees flexibility. So let me think about that. I'm not sure how many of them are actually based in Massachusetts. I've had one investor telling me recently, I've asked him which part of the portfolio was based in Massachusetts, and he told me, you know what, I did 8 investments out of this first fund. I don't even ask about location until the 3rd meeting on Zoom. So it's definitely, what I see from my perspective is definitely a sort of leveling of the playing field. Founders that sort of telling me, now it's a little bit easier to get access to VCs because they're all on Zoom, they're all checking their emails, everybody's accessing VCs online. So I feel that we are leveling the playing field. And at the same time, I hear from VCs that they are managing their portfolio more remotely and all on Zoom, and especially in checking in with existing companies, existing founders. They're like, we have regular check-ins online, and it's totally normal. I feel that meeting new people and signing a check has become more normal, even if I haven't met the founder in person, only through Zoom.
So Michael or Rob, from a quality control and I guess investment management standpoint, when you deploy capital in multiple regions, you're managing multiple startups and founders, how does that affect relationships? How does that affect your overall management of your investments? Tell us a little bit about that.
Yeah, I can start. Sorry. I'll go ahead, and I'm sure Michael will fill in. So I think geography matters less, but in-person interaction with founders still matters a lot. I think the onus is on investors to get on planes and trains at some point, I've been traveling quite a bit over the summer to still spend time with founders. I think the quality of the discussions, the quality of transparency is just much higher when you're able to build rapport in person. So I actually don't think that that is going to get taken away. I do think that evaluating companies, it's also helpful to have some level of network centrality with founders so that it's easier to be able to understand and evaluate teams if you don't know them, if there are folks in your network that are familiar with you. And so that becomes much harder to do in other geographies. So, from that standpoint, it's, making more distant investments is challenging. But I think that the nature of opportunities is that, as Michael said, it's being democratized. And so the burden is on us to get to work harder and capture the opportunity and try to do what we can to be the best partners we can be, even if our portfolios are a little bit more diffuse.
Yeah, well said, Rob. I mean, I wouldn't add anything to that except to flip it on its side and say, if you're an entrepreneur, what do you care about? And why would you want to work with us if we're, for example, 3,000 miles away from you? And so the answer is often very simple. They will say, do you guys actually understand our domain? Do you have a network of people that can help us build, by stage that have been where we are, or by function that perhaps, understand what part of the journey we're on? And then later, obviously, as they start to think about how to get the key partnerships that they need or access the hires that they want, et cetera, can we help them with those kinds of things? And truthfully, I mean, the answer might be no. And that's okay. We're cool with that. We need to kind of let that go if that's the case. But if they're very intent on doing it, we just literally invested in a company that is, I would describe it about as far away as we could imagine, in open source. And they are very much intent on keeping their whole culture distributed. They think that's part of how they'll be successful. So I would say the other thing that, on the LP side, they look for is, do we have a hand on the, that just put the finger on the pulse in the usual sense of what we're doing and where we're doing it and how we're doing it. And if the answer is yes, and we're managing risk well and looking for obviously great upside, that's what they invest in us for. They trust us to do that. But is geography involved in that? Well, as you can hear, I'm going to talk out of both sides of my mouth. Yeah, it's very much involved in it. And is it a factor? Absolutely, it's a factor. Should it change how we work? I mean, if it's responding to the entrepreneurs, yes. But generally speaking, I don't think it's going to be a factor in how we build our business going forward.
Well, it's an interesting equation, right? Because you're trying to find the best entrepreneurs to invest in, yet you have responsibilities fiduciary to your limited partners to make a particular return for them, correct? So is it more about finding that return profile to make it for the investors that you need to go to other places? Is there not enough activity locally in the Boston area, given that we're on a panel hosted by Startup Boston?
I would say that it'd be...
No, I was going to say, what would you say? I'm very curious about, for example, I know you guys went through a lot of thinking about opening an office in New York. What was the decision behind that?
Yeah, I mean, I think our point of view is to the extent that geography is a somewhat artificial constraint as an investor, we ought to lift that constraint. And I think that with digital technologies and the way that founders and companies are working, there really wasn't a reason not to expand. With regards to our New York office, there's a question, why not open a San Francisco office or Miami office or an Austin office? And I think that actually comes down to kind of the operational complexity of then having multiple locations and having the number of human beings required to be able to support that. And so, we have a operating model that I think works with 2 offices for now and a small number of partners. It would be a pretty big shift for us to expand that operation. And we feel like between those 2 offices, we can handle a pretty wide set of opportunities. And we'd love to do lots of things that are local, but a lot of things come our way from other areas, locations too. And so there's no reason for us not to pursue those if we think we can serve the entrepreneurs as effectively.
Yeah, and I'll add to that. I think there are it depends on the thesis that the team is focused on, and sometimes there are some constraints that as the world changes, you just have to adapt over time, which is important. But different folks have different theses. And to your question, Ian, I think there's a lot of talent in Boston, and Boston is a place that it will never go short of talent and resources. But at the same time, I think by looking, expanding your perspective, it allows you to also tap into, a different, unique pool of talent. Something that when we thought about diversity, of course, there's the gender diversity, racial diversity, but an important thing for us was also geographic diversity. All right. So, that is something that, when we think about access to talent, access to support, access to resources, leveraging places that we can help connect our founders to those resources, so that they can help build great companies. So that's really the focus, right? Also, another layer of the question is the returns for LPs. By helping build great companies, it helped create phenomenal returns for the LPs. So then we don't necessarily want to restrict ourselves to geography. We want to ensure that our founders are getting, they're sourcing talent from wherever they can to help build their companies.
That's great. I appreciate that. And I guess, something that came up earlier was cities doing a good job at either attracting or maintaining or, sort of stimulating that innovation. What other cities, we've heard New York come up, what other cities are you seeing that are doing a good job outside of Boston?
If I may jump in, sorry for going back to back here. We just held our inaugural orientation in Tulsa, in partnership with Untitled Capital and Build in Tulsa. And it was phenomenal working alongside with them. But seeing what Atento is doing to really reignite the economy of Tulsa and attracting talent there, we were really impressed. And also acknowledging, what happened, in Black Wall Street in 1920s. There is just an economic renaissance that happened in the 20s, and they're trying to really shift and bring attention to that, but also support founders in building companies in the middle of America. So I think they're doing a really nice job there in attracting talent and supporting them.
Anybody else, Michael, any perspective on that?
I think the person who's probably going to have the most perspective is Lucia, because you see all the various different cities that are being, reporting day to day and what's going on in innovation, etc. But I'll just make a sort of a play to support Daniel's point, which is, diversity happens everywhere. That's the very definition of it. And we think that the key is to make sure that there's full access to VC or indeed opportunities for people to join, with a diversity of geography being a part of that. The only thing I'll say that's going to be hard is obviously when these companies actually have to come to operate. If you don't understand how to operate in a remote fashion, don't just start and try to figure it out. It's a very definitive thing, and having experienced it, in international at Symantec, which was a very big business, sort of, thousands of people. Those who were very comfortable with it did great, and those who weren't and were constantly thinking about how do I get to HQ and influence this or that really struggled. And so we've got one other layer now, which is not only that but also hybrid. So if you've been in a meeting, which actually I'm going to be in one today, where you have half your team local, in our office, and then half of it, remote, and then the founder, for example, who's pitching from a completely different place, it's hard work to maintain and manage all of that and build a culture that's sustainable.
Sure. No, thank you.
If I may just build a little bit on that with a bit of historical perspective on this. I remember that, say, March, April 2020, a number of VCs I spoke to were like, oh, we're just focusing on the portfolio right now. We're not really interested in making new deals. So there was definitely, I would say, an initial panic into, of course, it was the situation, a very scary situation with the pandemic, but there was definitely a period of time where everybody was climbing up and saying, oh, we're focusing on the portfolio now. Then over the summer, the pace of deals has definitely picked up. And just to add, just to have to give one number to this panel, PitchBook reported that the total amount of deals closed in the US in 2020 amounted to a total of over $160 billion, which was an absolute record, and was a record compared to since at least 2006, before the crisis. So there was definitely some panic at the beginning, and in April, March, April, total number of deals that was below average. But then it seemed that everybody was getting comfortable with the Zoom or the hybrid or this new model. So, and this year, according to PitchBook, we are on pace to hit another big number in terms of total money invested, which is likely to break the record or hit the same record. So we may have reservations about how this whole thing, how the whole remote things works, but it is working if we look at the numbers.
That's great, Lucy. And
one thing I would add, though, just as a little bit of a counterpoint, is the numbers are up, but the number of but it's mostly dollars, and it's dollars concentrated into smaller numbers of companies, and that's a trend that's been consistently occurring, where the number of the dollars are going up, the number of deals are going down, and a lot of the deals themselves are in sort of mid to late stage rounds. And so I think what we saw during the pandemic and during this period where work has happened remotely is a concentration of dollars into companies that are already showing traction and scale, and in many cases are founders that are already known to the investors, or there's more meat on the bones. I think that what we are still seeing to some degree, and have been seeing for a while, is a little bit of hesitation to take risk with first-time founders, with founders who are outside of traditional networks, and really early stage projects in markets that are a little bit less well understood. So that's still I think it's a problem. It's a big opportunity for us as investors to still focus on those areas. But I would just add that little clarification based on what I'm seeing in the data.
Thanks, Rob. And I want to come back to sectors, especially from a macro perspective, Lucy and Rob and Michael, and the sectors that you're focusing on. But I want to touch on something that you just alluded to, Rob, and go to Daniel, because Daniel, you are focusing on most likely underserved, underrepresented populations and first-time founders. So, that is counter to, I guess, what Rob just alluded to with the amount of capital that's being deployed into traditional, would-be entrepreneurs. So tell us from your perspective, tell us about your strategy, tell us about how you're looking at it and why it's so important.
Yeah, I mean, I think it's so spot on, Rob, that we're seeing, especially for more diverse funds, we're seeing capital going towards the seed and Series A stages and above, right? And that's positive. Like, we want to see more capital especially for diverse founders in those stages. But the challenge is that many underrepresented founders don't even make it to that stage, to Rob's point. All right. So, when we look at the funnel of VC, that starts an initial problem at the beginning. So that how can we ensure that founders even get to seed or Series A? And for us, an important way to do that is that we need to expand that funnel at the front. So at Visible Hands, what we're doing is that our goal is not necessarily even to be competitive in the ecosystem, but we want to help build net positive companies. So if we're bringing more companies to the funnel, it helps ensure that by the time that they're reaching, Michael or Rob, that they have gone through a process of received incredible support, that they have validated customers, that they have proven an important level of traction, so that Rob's team or Mike's team can support the growth of these companies. But the really important core point here, Ian, is that we need to expand the funnel at the beginning, because if we don't, there's no way that they're going to make it at the end.
Right. Thanks, Daniel. And so let's touch back, Lucy, real quick. And, that large number that you mentioned, 160 billion last year and another record year this year. What sectors are you seeing the capital go into?
It's still very much software dominated. And it is true that definitely we have seen sort of this new trend. The seed is the new Series A, and the numbers have become sort of even massive. Going forward to the entire life cycle of a company. We've had a number of unicorns this year that were in different sectors. I remember Locus Robotics, but mostly it's definitely software dominated.
So Michael first, and then Rob, where are you looking for deals these days? What sectors, what industry verticals are you paying attention to?
So simply put, we look for all the best founders that have got large markets that we can go after in SaaS. Typically B2B is sort of our focus, but B2B2C often plays out in things like commerce. And the net of it is that we'll do that wherever it is, obviously, that we think there are major opportunities emerging. So we just invested in 2 companies outside of Boston that have both become unicorns in the last year. One of them has raised capital twice in the last 6 months, and gone from I think it was $140 million valuation to $1.4 billion. So it's like a 10x. But forget the valuation, their growth has just been extraordinary. They just announced an acquisition again yesterday. I'm purposely not disclosing names, but happy to do so if you want. But the point is, that's actually in Chicago, as it turns out. And it came to us through one of our core members who had been part of one of our companies for a long time. So both my partner John and I had worked with them for, 20 plus years now. So, did we go looking for him? No. Would we have gone after that business? Yes, it's in supply chain. It fits our commerce thesis, etc. But I will say it in the way that I hope that we, kind of ground ourselves. We always say we're Boston biased, and that's where, as I said, 2/3 of our investments have come from. It just so happens that that's also the same number, that is companies in our portfolio that were introduced to us by core members. So we're not driving the, external exploration. We're actually trying to pursue it with the people that we know. But to answer your question in the full, the third that we're not waiting for somebody to introduce to us, we're very much going after the theme of digital transformation. It's pretty obvious to say it, but I think we've now heard different people say it's several years worth of acceleration that's happened in the last year. And in that period, what we've seen is people trying to figure out everything from future of work to reorientation of their basis for value chain. And honestly, I think that Boston is a good place to focus on those things in certain sectors. So fintech, for example, huge area for us. Obviously, we don't invest in biotech, but health tech is huge. And I could go on. So truthfully, I think we are going to do what we should do, which is focus on people first and foremost, and then market second.
Thanks. Rob, do we have any perspective on what are you guys looking at next year?
Yeah, so we're a thematic fund. We have this wacky theme called the everyday economy, which you can go to our website and read all the stuff we write about that. But, we basically think about where large populations spend all their time, money, and energy, and want to invest in companies that align with those big, priorities. And so, we think a lot about food, housing, caregiving, both parents and children, everyday work, especially for like the non-blue collar, kind of office worker. The verticals where we've been pretty active recently have been in areas like digital health, given that has been an obvious consumer priority. Fintech, as Michael alluded to, and increasingly we're thinking about climate tech. It doesn't really fit our model. A lot of kind of traditional clean tech style investing. We try to be largely software driven, but we've made a number of investments that touch that shifting end user priority and corporate priority, and we look to do more of that if it fits our model.
That's great. Thank you. Lucy, I want to go back to you for a second because you're covering all these stories from your side with the BBJ, and so what does the BBJ like to see? What do you like to see? You must have a little bit of a bias. What are the exciting stories that you like to bring to the Boston area?
Well, obviously, whatever is exclusive is definitely interesting to me in the first place. I really like to see when say somebody really accomplished with a huge track record starts something completely new, a new startup, a new product, a new network group. This is something that is inherently news. As for me, if I can just do a little bit self-promotional plug, please just let me know what you're doing in the simplest form, and it's going to be great. I receive a number of cold emails, and sometimes I don't even understand what the person is pitching. I believe that some of the investors may relate to when they receive a cold pitch and it's not even clear what the company is working on or who the person is on why this is relevant to me. So I spoke with a VC recently, and she told me that during the pandemic, she started receiving more and more cold emails, probably 25 a week, which she described as a very as an increase from pre-pandemic times. So if I could just say that building on that, we're all on Zoom, at least for some time. We consider that normal, and it's completely fine to reach out through a cold email. And usually what gets my attention is a very clear pitch short that says, we are local, we are in Boston, so geography in my coverage still matters. We're working on this. We had this little bit of funding. We have just hired, say, these new executives. I'd love to talk to you about what we're doing. That gets my attention, like a simple pitch that is really tailored to me and makes it clear why this is relevant to me and my coverage.
Thanks, Lucy. It sounds like venture pitch from a different perspective. Is that how Michael and Rob feel as well? If a founder wanted to get in touch with the three of you, do you suggest the same advice?
Well, we joke about it at one level. I think Rob has this experience too. Working at Harvard, for example, as mentors, our goal is to help people not worry about it. And so I always say something very simple, which is, look, we don't have a job unless you actually have a business you want to build. There were no, entrepreneurs pitching, etc. So we try to break this sort of mold of, VCs are people in ivory towers. Some of them are, but not the best ones in my experience. And then to Lucy's point, in terms of the pitch, I always encourage them, instead of pitching, to actually ask questions. So when you get in an elevator, people say, "Oh, you should have your elevator pitch." I'd say the exact opposite. You should know your audience and ask them what they're interested in and why they're interested in it, and where they think they're interested in investing, etc. And if you find a fit, it's easy. But cold pitching to somebody like Lucy, it's hard.
Certainly.
Yeah, I really resonate with what Lucy shared. I think being able to communicate with great clarity and succinctly what a business does is a strength. I do empathize with founders who probably feel, pitching a journalist, okay, like everything I write might end up, out of my control in a publication somewhere. And so there's a little bit of fear. Similarly, with a venture capitalist, there's the fear that, okay, anything I write might be used against me for a competing investment or might get shared to a competitor. So I totally understand the hesitancy. And so I realize that it's hard, but I do think that it hurts you more than helps you as a founder to be, overly vague and obfuscate things. And so, I'd say more transparency is generally better. You really want to think about, like, what is the professional reputation of the person you're speaking to, as a professional journalist, investor that has, good experience and a strong reputation generally are pretty safe spaces. But I empathize with the concern for sure.
Danny, you got a take on that?
Yeah, I mean, absolutely. I think everything that everyone has said, and just to add a little bit here is being very clear with your communication. And I think for founders, it's having a clean deck. And if somebody's going to take a look at your material, that is going to be the first thing that they see about you as is a representation of you and your business. So making sure that is really well thought out, is simple and clean. And then the other piece, and I want to double click on Michael's point about asking questions, showing curiosity. And you can immediately demonstrate a sense of curiosity by having done research to understand, what is the value prop of the VC, and what have they done in the past, and how is it relevant to your company? So that sense of curiosity and being really clear in communication, I think, are really important.
We had a couple of very good comments from the audience here. A reminder that one must always consider their audience, and Michael, you alluded to also start with the problem and why it's so important to solve. Very good points. I do want to encourage our audience to continue to participate through the chat and through Q&A. I'll bring in a question from the audience right now. Can anyone talk about how international startups can connect with the Boston VC ecosystem?
I think Michael probably has more perspective. It sounds like he's done more investing in his career internationally, or has more perspective. What I would say in this case, geography actually does matter from the standpoint of we tend to focus on companies where the end markets are North America based, and that is mostly about our ignorance and inability to assess risk and strategies for other geographies. And so if it's an international company that is targeting an international end customer, that tends to very quickly not be a fit. We have made a number of investments that are international, European-based companies targeting the U.S. market, in which case, the way they connect with us is pretty similar to domestic companies, often through, referrals, or sometimes it's even cold outreach. I actually think in this case, accelerators are super helpful as well. One investment came from Techstars London, and so you sort of have a organizational support and I think that's part of the value proposition of really good accelerators. It helps doing this cross-pollination across geographies. But I'm sure Michael has more thoughts than I do on this.
I actually like where you started, Rob, and I'll agree with you on accelerators. So we actually have investments in other VCs intentionally as sort of seed partners or pre-seed partners. One example is Seed Camp in Europe. And I think they do an excellent job of working through, finding the best companies. I think the hottest company right now is Hopin, which is, fantastic example of a startup. And by the way, just to be transparent about it, we have that investment. We also have the investment in Goldcast, which is a local company. I don't think they compete, but they are good examples of how companies get started in different geographies and approach things. Anyway, the bottom line, I think, is it depends on the entrepreneur's mindset. If their mindset is they're an international business and they need to compete, on a world stage, then the US is extremely important. And so figuring out how to compete here is critical. In fact, this is personal experience. I've had to move my business twice from Europe to the US in order to compete. And both times it was actually extremely effective. The first time, I just want to admit it, it proved I was at 21 how little I knew about the US and what a disaster it is if you don't understand scale, because, being 10 times or 100 times bigger just completely changed the equation. And so we got wiped out in that process. But I learned so much from that it was the beginning of my career, effectively. And the second time, I'll say it in the way that I think Rob is implying it. If you come to the US with the right approach, with an understanding about how to actually be humble and think about what it is that the US market needs, and then also are willing to think about the broader sort of logistics of being a global player, you can do very well. And the trick is often to actually partner with not just the accelerators, but as you grow, of course, the real players that dominate a market. It's the classic standing on the shoulders of giants.
Yeah.
And so, for example, my second business ended up getting acquired by IBM. That happened in a very natural way, and it was good that it did. So I would say to entrepreneurs thinking about it now, though, ignore both of those data points and say, what's your mindset? Where do you want to win? And how do you think you can do that best? And approach it that way. And don't get, I would say, in any shape or form put off by geography. Just be clear how you're going to exceed.
I appreciate that. Thank you. Another question that's come from the audience is, what's the best way to scope out a venture capital fund that will fit? And does it have to be sector specific?
Yeah, I mean, I'll jump in. I'm sure everybody have a perspective to add on this. It's important to truly know your business as an entrepreneur, and this actually goes well with Michael's point about what's your mindset, right? So understanding your business, where do you want to win? Because where you want to win will give the VC a clear indication of how they're also going to win. And it helps with the communication of the value props for your business and also the value prop that you receive from the VC. So the mindset is important. Clear understanding of your business and the industry is important, but also just understanding the VC. What is the theme? What are they focused on? Does geography matter to them? So those are all important questions to analyze to truly understand your audience before you reach out. Otherwise, it's not going to be a good use of time.
The Boston area is a very parochial place, and none of you seem to have a Boston accent. I'm assuming that none of you were actually born in the Boston area. And so, now three of you are running venture capital firms. One of you is telling all the stories about the activity. So, do you actually view yourself as local, or do you view yourselves as living in the Boston area as a sort of anchor and participating everywhere else? How do you view the parochial environment versus the, I guess, the artificial constraint of geography? Oh, stumped.
This is my home.
Yes.
I've lived here since 2005, the second time around. And so it's definitely home. But I'm also, in a way, kind of like a nomad of the world. I was born in the Philippines. I grew up in Hong Kong, went to school in North Carolina, lived in California. So,
Let's go, Duke.
I feel like go Duke. It's a pretty, I don't know. It's interesting in a discussion around geography. It's like I love my home and I love the businesses here, and I love the thought of making this market as competitive as possible to attract the world's best talent. But I also am not like a bleeding hometown person, because this isn't my hometown in that way, right? And I think that, in a way, kind of is reflected in the way that we approach our business.
I think going a bit further on that, it's, the venture capital community, for founders that don't typically have access, it's difficult to get to know you or as the founders, investors, capital providers. So how do you make yourselves known?
Well, I'll just speak to one thing that, Lucy helps with a lot. We try to make sure that it's very visible what we invest in, why we invested in it, who we invest in, and what we look for when we're investing in people. And honestly, if we do a good job of that, I think it's up to the entrepreneurs to do their homework and establish the, why is there a fit here? Is this a sort of a cultural fit as well as an investment fit? And I just put it in the chat, actually. We've done a lot of just educational work to try to make sure that entrepreneurs figure out how to do that. And it can be as basic as, interacting with us online and engaging with articles we post, etc. But it's up to us to make sure people are very clear what flag we're flying.
Daniel, is that path always available?
Yeah, I think it's spot on. What we've been doing is that we started establishing partnerships with different organizations that have access to huge potential pipelines. So, for example, the Posse Foundation, which is a huge scholarship organization, they now, I think, have the 10,000 alumni who are all doing interesting things. So partnering up with them, or Tweako, MLT, just all these great organizations that have access to huge alumni bases. For us, we want to ensure that they know what we're doing, and that we can support people within those ecosystems who want to build companies, venture backable technology companies. So just being kind of really putting ourselves out there to formally establish some of those partnerships, I think helps get the word out there. And another thing it also helps with is that, many of these folks may not know where to find a specific VC. So we're saying, if they don't know where to find us, how can we ensure that we're going to places that they will most likely be or probably be? And that's been really helpful to us.
Lucy, are you seeing any differentiation? Is there capital going to different places that you might not have seen it go in years past?
What I have been working on a few months ago was a feature on how people were trying to get in touch with VCs using Clubhouse. In a sense, I see this as a challenge that providers of software that has to do with online events have all been trying to tackle in different ways. It's like, okay, we're like Goldcast, we're putting out an online event, but how are we going to encourage, those sort of serendipitous connections that come up from regular in-person events? And I find that this has been a challenge in this online world. But what I've heard from founders was that I don't know, to be honest, it's that if that is still the case, but people were trying to connect with VC through an array of platforms, online platforms, from Twitter, as in the old days, to Clubhouse, and the response was not that bad. And I mean, it was still. I wrote about deals that came from very serendipitous connections through Clubhouse. So what I would say is that the system, we may not like it, but it's still is working.
No, that's great. I appreciate that. So, let's get back to Boston a little bit more. So fintech, health tech, what else does Boston do well?
It's everything. Like, I actually think that's a fallacy. What are the biggest companies in Boston over the last few years? One could say consumer. We're great at consumer. Nobody in the world would say that, but Whoop's a consumer business. Devoted Health is a consumer business. Wayfair is a consumer business. Car Gurus, like huge companies here. And that is like the sector that almost everybody says Boston's a bad market for, right? Like, Boston has like unlimited excellent talent, and they are going to start companies that you can't imagine what sectors are going to be in. So I feel like that's almost like an unproductive discussion.
I
not to shut it down, but like that's
no, not at all. I thought you said you weren't a proud local. That was the most proud local I've ever heard.
No, I'm just stating the facts.
That's great. Any other perspective, Daniel, Michael?
I mean, I agree with Rob. I think there's just so much talent in Boston that the innovation that continues to come out of Boston really moves the world. So beyond fintech, health tech, Michael adding to it from consumer as well. There's just so much happening in Boston. So and I'm sure, Lucia, you're reporting a lot. You see a lot of these companies and what VCs are backing. There's just so much talent coming out of Boston.
Nobody's talking about this, so I'm just going to mention it. One of the key reasons people come to Boston or like to start in Boston is obviously our academic university and other resources that are being, focused on innovation here. And I agree with Rob and Daniel and everybody who sort of approaches it this way, which is the next great company that gets started here, no matter what area it's in, is likely to come out of a research lab or a founder who's just decided to make it their mission to go after something. I mean, I think it's fantastic that Toast is going public today, and whether 20 billion or it's 18 doesn't really matter. Fact is, Chris Comparado was actually at one of my companies for many years as a senior manager. And when he decided to go do Toast, everybody's like, what on earth would you do that for? That sounds like a kind of crazy idea. But, he's a very smart guy, and he gave a very clear reason for it, and he's built a great business. And the team that he's built there is an example of what you can do in Boston. And I think that's what we need to focus on, is how do we enable founders to build great companies here and take the best talent that we have and really create tremendous value, whether it's local or distributed. And that will be the next great thing that, defines Boston.
No, that's great. And so elaborate on that. How do we enable founders to do that?
Well, Lucia, I'm not sure whether it was you who wrote this article, but I remember being questioned about it a long time ago. And the bottom line is you have to have a region that is really attractive for Gen Z and upwards. But by the way, it also has to work for the other end of the spectrum too, because if you look at the stats, the biggest companies often get founded by people like, well, not my age, but 40, 50s. And they need to feel like it's a great place to raise their kids. And so it's everything from, keep the tea open longer and create the drinking hours that make it work, to at the other extreme, build great schools and invest in innovation that will make it possible for investors to really get excited about this.
Well, actually, to ask a question to that, Boston also tends to be almost a transient city. People come in and leave. I think part of the nature of the schools and the academic institutions. So then how do we keep people in Boston?
I think that was a question that we're supposed to answer, Daniel.
Yeah.
I want to get you all's thoughts on it. How do we do that?
That's a great question. That's something I think about a lot from our perspective in the startup incubator. We're looking at the blockchain sector, and we just put out a report with a research partner of ours that shows that we're producing, the number 3 in the country of all of the talent in blockchain right now, but it's all bleeding to California. Right. And so we're bleeding our blockchain talent out, and it's arguably one of the most exciting and fresh technologies out there. So how do you keep people? I don't know. I mean, I'd like to sort of throw this question back. Do you think that we're a little too conservative here in the Boston area, and it's not as exciting of an environment to create businesses?
Yeah, I would say, maybe to answer the broader question, and then one of the points would be yours, is you can look at what San Francisco's doing is like what not to do recently, right? So affordable housing, make it an affordable place to live, not have a ton of corruption. That would be probably pretty good. Make it an attractive place to live, right? Like from a day-to-day life standpoint, I think those are really important. What San Francisco does have is this belief that like anything is possible, and that if you really care about being in the action, like that's the place to go. And the Boston does not have the volume of companies in many sectors to be able to create that same level of excitement, but we do have a decent level of volume, and there are markets with less volume that are garnering a lot of attention, like Miami right now. And so you could see a lot of energy that is created around the stuff that we do have, but I think it does come down to a little bit of a cultural shift. I actually give Michael and the Underscore team a ton of credit. Like, I think that they have, as a relatively new firm, they've created a real presence with their core communities and a lot of the events they've done to really give a sensation that like this is a market that is on the move. And I think that more of that would be helpful. It's actually tough to do virtually. I think that's actually one of the biggest drawbacks, is that you just don't create the same sensation of activity. And frankly, in Florida, where their COVID policies are much looser, which I am not promoting, advocating for, but that actually made it a little bit easier for them to execute on that in the last year and a half.
Just real quickly, I just want to note how interesting is it that we started this panel saying, well, no, geography absolutely doesn't matter anymore in investing. And now we're discussing how are we going to retain talent in Boston. It's definitely, it's an evolution, right? Quite unexpected a little bit, but.
Well, what I would say is the fact that geography matters less should be a net positive for this market, because if you're a founder, so I actually think the biggest knock in Boston over the last 10 years that we've been in business is there's actually been a dearth of Series A and B capital. There's been more and more seed capital available. And that should be getting solved, because now, if you're a West Coast fund or you're a New York-based fund and you're doing things remotely, like Boston's a great place to be targeting companies. And so I actually see it as a positive, not a negative, because, we do tons of seed investments, and we used to sweat over like, okay, who's going to care enough about this company to do a Series A or an early Series B? And that has actually like gone away for the most part. And that's really positive for this ecosystem.
I put it in the chat, but I'll just mention it. I think, we've all been talking around the resources, but density is also incredibly important. So, if you walk into a coffee store in Menlo Park, wherever it is in the Valley, you used to literally not be able to get an order in without bumping into 5 people that could be interesting and useful to you, whether they're potential hires or partners or investors, etc. And I think we have to find a way to create that online, because it's not going to be just physical in future. That is back to the point about geography. And finally, for entrepreneurs, we need to give them ways to intercept in the online world so that they don't feel like they have to be in every bar and whether it's in Boston or it's in San Fran or it's in Beijing, it doesn't matter. We just need to give them ways to connect to the density, and also create the serendipity that goes along with that of, enabling them to connect with people that will be key to their future. And thank you, Rob, for the acknowledgement. That's a great team. I will go back and thank them.
Well, that's great. It looks like we're coming towards the end of our time, but I want to thank Lucy, Michael, Rob, and Daniel for such a thoughtful discussion today. It seems that, it's a very difficult discussion to actually conclude. There are many different variables that go into the thoughts of whether geography matters, but at the end of the day, we're all here trying to strengthen the Boston ecosystem, and we're appreciative for Startup Boston for having us here today. So thank you all for watching. Thank you for your thoughtful questions and commentary, and we'll look forward to seeing you out there, whether digitally or in person soon enough.
Awesome. Thank you so much.
Thanks, everyone.
Thank you. Thank you, everyone. For all the attendees and panelists, encourage you guys to check out the agenda to see the rest of the panels going on today and throughout the rest of the week. Thanks again to our panelists for a great discussion. And we hope to see you all soon.
Thank you.
Take care.
Thank you.